So how did the London property market fare in the first quarter of 2022? Well, in this video, I'm going to be giving you the highlights and telling you what it may mean for the future. Hi everyone, Arinzeh here with Onyx Property Team and Keller Williams. Thanks again for checking out my YouTube channel where I feature updates on the London property market as well as lifestyle and some incredible things to do in living in this fabulous city. So in this video, I'm going to share some highlights of the property market and also talk about what it might mean for the rest of the year. The good news is that though London has really been struggling relative to the rest of the country during the pandemic and prior to that with Brexit, we are finally starting to see some good momentum in terms of the London property market, which is reflected in the first quarter results. Property values in London have now hit an all-time high of an average of £534,977 according to the lender Halifax. Since the start of the pandemic in March of 2020, 2 years ago, the London home cost was actually £493,000. So this is an 8.4% increase, or an average of £41,000 more value since the start of the pandemic. According to a different lender nationwide, the average property price in London is now at $518,333. This represents a £58,000 increase since the start of the pandemic and is the fastest annual growth rate since 2016, when at the second quarter of 2016, we saw prices increase on average by 9.9%. Across the Southeast, the market has been even stronger through the pandemic, with prices going up £54,000 on average, or 16.5%, from $331,000 to now £385,000 on average. However, London still lags the national average, with its annual growth rate of the quarter representing a 5.9% annual increase compared to the national average of 11% growth. This graph here just shows you what that average property price in the UK has reached, a record of £282,000, showing a rise of £43,000 during the pandemic. So this picks up all of the UK, including London and the Southeast. Flats are up an average of £24,000 since the start of the pandemic, while detached homes are up £68,000. And obviously that's reflecting that race to space during the pandemic. Definitely people are looking for homes and gardens or backyards, that extra space and outdoor space with their properties. The price of the typical flat in London is at £428,000, while a detached home in East Midlands costs £350,000. So again, that just shows you that to get a flat, you're paying over $100,000 more than it would take to get, say, a home in a different part of the country. So what are the key factors that have driven the results that we've seen? Well, the first is that we still continue to have limited supply and strong demand despite the prospect of increased pressure on household finances. London has a chronic housing shortage. It's not building enough housing, and therefore, with COVID, people definitely slowed down and didn't want to, say, be in London, wanted to get more space. But as the city is coming back alive, everything is kind of reopened, people are having to work again in their offices. People are again now, really looking for that proximity to being in London, lifestyle, and what it offers. The results, however, are stretching the affordability, and data from the Financial Conduct Authority shows that increasing house prices is resulting in more buyers having to take out mortgages with a life of 35 years or more. In June of 2020, 35,046 mortgages were sold with a term of at least 35 years, more than 3 times the level at June 2020. However, we have had higher savings, so according to Nationwide's chief economist, households accrued an extra $190 billion of deposits over and above the pre-pandemic trend since early 2020, due to the impact of COVID on their spending patterns. So with them still working, with people still working and being able to save more, it has now resulted in perhaps people having higher deposits to make that purchase. In terms of the Greater London inventory situation, which reflects on that supply issue I was talking about, the number of properties for sale in Greater London were 15% less than a year ago. The houses component of that figure is actually down 21%. As a result, we're seeing fewer price reductions, with 987 of available properties having reduced their price versus 1,137 a year ago. However, we are seeing a much higher number of fall throughs, which is deeply worrying. Here in the UK, agreed offers are not legally binding until exchange of contract, which is typically weeks or months after the due diligence has been completed. So to see this number of over 345 out of 1,451 properties under offer, this represents 24% of properties under offer fail to complete. The table also shows that the average days on the market as of 31st of March was 231 days, an increase of 212 days a year ago. But 39% of the sold properties sold at asking prices versus only 23% a year ago. In a separate table, this table shows that the number of days that it takes to sell in London has actually fallen from an average of 71 days in February 2021 to 57 days in February 2022. It's another indicator that the London property market is starting to rebound. Now, let's give you some updates on prime central London and the luxury market. Properties worth £1 million or more continue to make a comeback, while the world now has had to adjust with living in the midst of a pandemic. House prices are up while discounts are down. Prices have risen particularly well in areas outside central London, such as Richmond, Wandsworth, and Islington, as we see a race for space brought on by the pandemic. In this table here, you can see that in prime central London, property prices are still down 7.8% from the peak in 2014. The source is Coutts Bank, a private bank which supports the ultra-rich of the world. This has created an opportunity for some who are looking to buy centrally to still pick up relatively good deals in areas such as Knightsbridge and Belgravia, where property prices are still down 17% from 2014. However, this might be coming to an end, as we're certainly seeing, and I think most agents are, stronger demand from international buyers. I'm representing quite a few American buyers that are still quite keen and are, really excited about coming into the London property market. Kensington, Notting Hill, and Holland Park have been the most active in the over 10 million price bracket, while King's Cross and Islington has seen price increases of 12% over the last few months, according to Peter Flavel, CEO of Coutts Bank. Meanwhile, the market for super prime homes, those that are valued at 10 million or more, has skyrocketed. This graph shows the breakdown of those super prime properties and where they're sold. Sales doubled in 2021 from the prior year, and the period of October to December was the highest number of sold in any 3-month period since 2016. The number of trophy homes being sold in central London has now returned to pre-pandemic levels, despite the lack of supply, the collapse of Russian-led deals, and the overall Russian crisis that's happening, higher interest rates, and overall global instability. Sales of multi-million-pound mansions were 33% higher this January than in the same month in 2019, and 31% higher last month than in February 2019, as the luxury London market begins the recovery following the uncertainty of Brexit and COVID-19 pandemic. New data published by Arinzeh shows that the spike in transactions has pushed up the average price tag of a property in the exclusive core of the capital by 5.9% compared to this time last year, to an average of £1,700 per square foot. The average time it took for a high-end home to sell in prime London in the 6 months to February 2022 was 245 days, or over 8 months. This is an improvement over the 258 days in February when the country was in lockdown, but still over 70% higher than at the peak of the London housing market back in 2014. So it is still taking properties quite a while to sell. While around half of them, 51% of the homes that were sold, did so within 6 months, 18% took over a year to sell and only shifted after as much as a 14% discount. So my overall comments are that although stock is relatively low and we are still seeing increased demand, the market is still highly price sensitive. So if you have a listing that's not selling, it's really going to be impacted by the price, because buyers, while there are, the lack of inventory is there, they are still quite sensitive to making sure that they're getting value for the money. London is still a safe haven in times of uncertainty, which is definitely the case here. So we believe that this trend is going to continue. We're seeing U.S. buyers coming back, even though that the dollar is starting to regress back to historical values relative to the pound. But again, an eagerness to have a diversified portfolio. So I hope you found this video helpful. We think that the market is still going to be relatively strong going into the rest of the year. But nobody has a crystal ball on things. But overall speaking, given the level of pent-up demand, we think, and we're seeing a lot of activity right now. Now, this video was really talking about the London property market side and sharing statistics, but if you want to know more about lifestyle, please make sure to follow me on Instagram at Onyx London Life, where I put out daily posts about life in London. See you on the next video. Thanks so much for watching. Make sure to check out my other videos on my YouTube channel, where I share great tips and information about the London property market and living in this fabulous city. So that's Arinzeh with Onyx Property Team and Keller Williams. Bye for now.